Next term is the cash generating unit. Cash generating unit. Candidates, wait a moment, please. Just a minute. One moment, please. Give me 1 minute, please. Yes, candidates. IAS 36 explain one more term and a complete working for one more term that is about the cash generating unit. Okay, before starting uh, the understanding of this term cash generating unit, we need to consider one important point. If I have developed a mindset for you with respect to one asset about the impairment that's related to the prudence concept, so you need to understand one more thing with same framework, with same mindset with respect to a complete business, with respect to the complete business. What does that mean, complete business? Cash generating unit is basically the concept with respect to a complete business unit, not with respect to the one business or one asset. If the term future economic benefit, if the term future economic benefit relates to one single asset, so definitely the term future economic benefit also relates, it can also relate to a particular business or a huge or a complete business as well. Once again, if the future economic term with respect to individual asset and as well as a complete business as well. A complete business as well. For example, let's take a scenario. You people are the shareholder or debt holder, means financer of my company. And the company is listed. Normally in the listed company, the management is independent from the owner and takes a decision on behalf of the shareholders. Or in a very simple words, shareholders and debt holders is not participative in the management decisions normally. So if I'm going to report, if I'm going to report a complete business situation, if I'm going to report a complete business situation in any of the case, so it's my responsibility that I am not exaggerating. I should not be exaggerating the situation or the future economic benefit of the company. Instead, if there are some indication arises with respect to the losses of future, regards not to the individual asset or basis of the complete basis, that I should have to report to you. I should have to report to you. Let's take some example. For example, let's say, for example, for example, if on the basis of the one natural disaster, the stocks of the company damages and its impact not only to the inventory but to the whole business as a going concern. So what should my responsibility? My responsibility is not just to indicate about the loss of inventory, in fact also about the going concern aspect of the whole company. It's a simple example. For example, we have a business of chain of restaurant. We have a business of chain of restaurant, and in a whole country we have 15 branches. We have 15 branches, but one of the branch but one of the branch but one of the branch is not up to the mark, because for example government has taken some initiative, the infrastructure development surrounding the branch, and it's a plan of almost 3 years, and the access of the public to that particular location is difficult, at least for next 2 to 3 years, due to that some infrastructure planning or development. So that one particular restaurant's profitability is undermining. That means it's not about one single asset, it's about one business unit of the company. It's my responsibility that I should have to report you about the complete business scenario or the losses expected from this business unit. So based on these examples, either example number 1, natural disaster impacting the business, not just inventory, restaurant, one of the restaurant is in difficulty. These are the examples not related to one single asset. This is what about a complete cash generating unit, a complete business unit. Based on this concept, the accounting standard in IAS 36 has developed a concept that's named cash generating unit. Has developed a content that's called the cash generating unit. And now we are going to discuss the term the cash generating unit. What does that mean? Cash generating unit. Smallest identifiable group of asset that generates cash flow independently. Smallest identifiable group of asset that generates cash flow independently. The smallest group of asset, identifiable group of asset that generates cash flow independently. For example, based on my example, we have 15 restaurants, and for example, each restaurants generate the cash flows independently. They are not dependent any of each other. All the profitability, all the cash generations of each restaurant works independently. That means smallest identifiable group of assets that generates cash flows independently. They are not dependent. First of all, we need to understand the term cash generating unit. Now the second term, how impairment calculate with each cash generating unit. Now then, how allocate the impairment for each cash generating unit. In fact, four stages. Number one, what the theme behind the impairment of cash generating unit. That means impairment aspect with respect to the whole business, not respect to the one business unit. Number one. Number two, second important thing. Second important thing. What is the meaning of cash generating unit? Identifiable group of asset that generates cash flow independently. Number three, how impairment calculate for cash generating unit. And number four, last one, how allocate the impairment with respect to the allocated or identifiable group of assets. Let's take more examples other than restaurants with respect to the cash generating unit. For example, we have a business. We have a business of transport, and we have a fleet of buses. Fleet of buses. We have a fleet of buses. And for example, we have a fleet of 20 buses. We allocate 5 buses for 4 routes. There are 4 routes. Each route allocate these buses and license. And till now, what we will say that each route of bus, route 1, route 2, route 3, route 4, each route includes buses, 5 buses and 1 license. And for example, situation number 1, each route including their buses and license works independently. Means they are not integrated. They are not responsible. Each route is not responsible for any other losses of routes. Means if route 2 including bus and license generates some loss, it's not the responsibility of other unit of the business. So we can say that till now route 1, 2, 3, 4 are independent cash generating unit. These are independent cash generating unit. But if I add one more thing with this example, let's say let's suppose government has made an arrangement with this business, with our business, and government says that yes, we will allow a 4 license of 4 routes, but you cannot isolate or withdraw any one route at one time. If you wanted to run these 4 routes, on simultaneous basis. Or if you wanted to isolate, so isolate on a simultaneous or you wanted to withdraw, then withdraw with all the routes simultaneously. Either simultaneously 4 routes run or withdraw 4 routes simultaneously. So that means now the business plan is that either we will run the 4 routes altogether or not. If any one of the route, for example route 2 is loss making, we cannot withdraw, because either run altogether or withdraw altogether. It means if route 2 is loss making, so other part of the business will participate to cover these losses. So fleet of buses, 2 examples. For example, other than this arrangement of government, if this arrangement of uh, simultaneous working is isolated, if it's not the part, then each route is independent cash generating unit. Because any losses is not compensated by any other. But if this clause exists, that means that each not each route is independent cash generating unit, but the whole business of 20 buses and 4 license is a cash generating unit. So number one, if we wanted to put impairment test by cash generating unit, first of all we need to understand in the business, or to identify in the business, the cash generating unit. One example is the restaurant. If all restaurants are working together, working independently, the losses are not dependent of any others. That means we have 15 cash generating units. But if they are integrated, or the branches are integrated, responsible for each or any other losses, that means they are the whole 15 branches is one cash generating unit. That's a clear difference. One more example. For example, we have a business of mining. Yes, mining. Government has we have purchased a land area from the government for 15 years, and we have a contract to drilling the land parts and extracting the minerals and so on. This is our business. So we have purchased the rights from the governments. We have deputed the plants, equipments, and also installed a private railway system to move the material and the finished goods. Private railway system. So ask yourself, is that private railway system is independent cash generating unit or the part of the business? Yes, of course. The private railway system is a part of business. This is not independently cash generating unit. In this business, the complete cash generating unit is the land rights plus all the plant and equipments and plus all the private railway system. So these are some examples for the term cash generating unit, and I hope that you got the clear idea about the term cash generating unit. So 2 things we have done. Number one, what is the concept behind the cash generating unit? That's the business model of the impairment test. Number two, what is the meaning of the cash generating unit? And number three, now how to calculate the impairment loss. How to calculate the impairment loss? Impairment test for cash generating unit. Impairment test for cash generating unit. First of all, we have to identify in a business the independent cash generating unit. For example, there are three independent cash generating unit of the business. We have identified three units of the business. Any of the business, these are three units that generate uh, the cash flow independently. First of all, allocate the carrying amount of net asset for all of these independent units. For all of these independent units. For example, it's in thousands. 2000 belongs to cash generating unit 1. That's the net assets, complete total asset minus total liabilities. And that's for example 1500 and for example that's 1000. So the total that's equals to the 4500. That's a carrying amount of the net assets. Now the next thing is that before testing of the impairment of each cash generating unit, first of all allocate the goodwill. First of all allocate the goodwill for each cash generating units. Allocate the goodwill. And what is this goodwill? What is this about, the goodwill aspects? Do remember one thing: goodwill of any business, it's on totality basis. For example, McDonald's has a business not on the branch basis. That's a complete scenario of the goodwill related to the McDonald's. For example, General Electric having different business. For example, mechanical business, electrical business. General Electric, majority of the business belongs to electrical, but some of the business of the mechanical as well. And some part of their parts relate to the auto manufacturing as well. But all the cash generating unit, but the General Electric has their own brand. Apple in a cell phone, in a laptops, but brand or goodwill is not belongs of the Apple, is not isolated with respect to the cell phones and the laptops. Apple has their own complete goodwill. Same as it is, the Google have a different business, but not independent goodwill. Goodwill or image or branding, it's one unit. For example, this business has a goodwill of complete that's equals to 800. Before impairment test, we have to allocate the impairment. We have to allocate the impairment. 800 divided by 4500 and allocate according to the proportions. Into 2000, that's equals to 356. 800 divided by 4500 into 1500, that is 267. And then 177 or 178. Number two, the next thing is that corporate assets. Corporate assets. What is the meaning of the corporate assets? Corporate assets are those assets who are not involving to generate the cash flows, but they are supportive. For example, if the bank has 1200 branches but one head office. So for example, 1200 branches involving to generate the cash flows, but the head office, it's not involving to generate the cash flows. For example, 15 chain of restaurants in our example, but we have established a head office for administrative and other matters. Centralized head office. So that head office, it's basically the corporate asset. It's not involving to generate the cash flows. It's a part of supporting the cash flows. Candidates, I want 1 minute break for namaz. Sorry, Azan prayers is going on here. 1 minute break, please. Okay, let's move on. Corporate assets, that's not involving in generating the cash flows, but supportive to generate the cash flows. For example, head office. For example, research centers. Apple has 3 research centers in the world, in the China, in the Israel, and one more in the South American country, and involved. So these are 3 research centers. So that's research centers not generating the cash flows, but they are supportive to the cash generating units. Now, what to do with this corporate assets? For example, corporate assets values are 200. So same like as work with the goodwill, allocate on proportion basis. 200 divided by 4500 into 2000, that is for example 89. 200 divided by 4500 into 1500, 67. Yes, before impairment test, we have to work out for the calculating the carrying amount of net assets, then goodwill, then corporate assets. So carrying amount for impairment test, that is 2,356.89. That is 2445, then 1500 plus 267 plus 67, that is 1834, 1000 plus 177 plus 44, and that is 1221. 4500, 800 plus 200, and that is equal to 5500. And for example, make an impairment test. For example, make an impairment test. For example, the recoverable amount for impairment test we have calculated or we have given by the examiner. For example, this one is 3,000, this one is 4,000. For example, this one is 1,500 and this one is 3,000. And of course, number one, if we calculate the impairment loss, so we will say that nil. But in this case, that is 334. 1834 minus 1500, that is 334. And this one is nil. This one is nil. And now what to do with respect to this working? And this is what we have done, that how to calculate the impairment test for the cash generating unit. Identify cash generating unit and then allocate accordingly. But one important thing you have to consider here, one very important thing, very much important thing we have to consider here, and that is the point. If this is the complete business scenario, this is what the complete business scenario, ignoring isolation of cash generating unit. And what if, listen this point very carefully. For example, this is our chain of restaurants and we have 3 restaurants. Our total carrying on amount of net assets is 4,500, total goodwill 800, and total 200. And we are working independently, not dependent to each other. But we are making a cash generating unit as on a total basis. We are putting impairment test on total basis, not isolated basis. So what will be the wrong? The wrong is that if the complete carrying amount is 5,500, so the complete recoverable amount is 4,000, 1,500 plus 3,000, that is 8,500. And if we calculate on totality basis, then means impairment is nil. And it shows that the cash generating number 2 impairment loss of 334 is somewhere hidden. Is somewhere hidden in cash generating unit 1 or 3. Is hidden on cash generating unit 1 or 3. It's now become hide it in 1 or 3. So the important point is that it is technically sounds logically, technically and sounds logically that if we work independent, so that means cash generating number 2 impairment loss will not be compensated by 1 or 3. And if we test on total basis, there is reflecting a wrong picture. But other important thing is that yes, 1, 2, 3 is one cash generating unit. 1, 2, 3 is one cash generating unit. 1, 2, 3 is one cash generating unit. That means logically it sounds logically that we don't want to isolate the business in the cash generating unit in 3 components. The complete one business is a cash generating unit. The complete carrying amount of net asset 4,500, complete goodwill is 800, corporate asset 200, and carrying amount of impairment is that is 5,500, and recoverable amount for impairment tax that is 8,500. And of course, if 2 losses is adjustable by 1 and 3, that's complete task is perfectly right. So important point is that very closely monitor that the business divisions are work independently or they are dependent. And now the next thing, next important thing, very much important thing, next very much important thing. Next very much important thing. How to allocate the impairment. Allocation of impairment for cash generating unit. And document shows that very clearly. General rule. The general rule. Number 1. The impairment should be allocated in the following order. Goodwill allocated to the cash generating unit. Number 1. And other assets on a pro rata basis based on impairment value. The carrying amount of the asset should not be reduced below the higher of its recoverable amount and 0. The amount of impairment loss that would otherwise be allocated on the asset should be allocated on other assets on a pro rata basis. This is what the basic point of F7. 2 points. Number 1, first hit it to the goodwill and any specific loss. Number 2, to the other assets on a pro rata basis. But do remember, on the allocation of the impairment loss, the carrying amount of the asset should not be, any asset should not be reduced to its recoverable amount. That's important. Next, allocate the impairment allocate the impairment with unallocated corporate assets or goodwill. Where not all the assets or goodwill have been allocated to individual cash generating unit, the different level of impairment tests are performed to ensure unallocated test of impairment. That is test of individual cash generating unit. Test of individual cash generating unit including goodwill and any portion of carrying amount of corporate assets that been allocated on a reasonable and consistent basis. Test of group of cash generating unit. There's the smallest group of CGU that we have done in the example that includes cash generating unit under review and to which goodwill can be allocated or portion the carrying amount of corporate assets can be allocated on a reasonable or consistent basis. And this one is the example. And this is your first assignment I'm giving you, for before the next class. You have to submit this assignment for this. That's very critical. That's very critical, and that's very much important. You have to done it. Now, allocation of impairment. For example, this one is the case. How to allocate 334 for this? Number one, isolate with the goodwill, corporate assets, goodwill, and then remaining pro rata basis. For example, we wanted to develop the thing. We will work out impairment loss of 334. Impairment loss of 334. Number one, the goodwill. And then that is 267. And then rest of the part 1567. Corporate assets and carrying amount of net assets. How to allocate this? That is remaining portion 334 minus 267. Remaining is 67. And 67 should be allocated on 15 and 67. $1,567 and belongs to 64 and 3 and 64. And this is how to allocate the aspects between the goodwill, corporate assets and carrying out of the net assets. Another tricky aspects relate to this one, but you must have to do assignment first, then I will work out accordingly. Okay, so this is what we have done with respect to the working of the impairment test. the working for the impairment test and impairment losses, either for individual asset or either for group of asset, that is cash generating unit. Okay, second point, we have already discussed a little bit about it. After the impairment test, subsequently we have to consider very important thing. We have to consider very important thing that we need to depreciate the asset on individual basis with the new amount, that is impaired asset. That's one thing. But another thing, another part of these things, subsequently we need to consider one thing, that's about the reversal of impairment on each reporting date or indication about reversal of impairment. But goodwill reversal of impairment is not possible. Once impaired, it's never ever possible that goodwill impairment will be reversed. It's not never ever possible. So for example, if some economic crisis arises and for that our product market volume is reduced, that's an impairment indication, and we have done impairment including goodwill, but subsequently the market now become improved. So other than goodwill, it may possible that subsequently market improve, that's an indication for reversal of impairment. That means reversal of impairment other than goodwill, it's also possible.